Iraqi Dinar Today latest news continues bringing updates to viewers. Imagine stepping into a financial institution with the intent of having your foreign notes examined, only to be told they cannot be processed. Many people holding Iraqi dinar or similar currencies describe this as an unexpectedly tense moment, especially after safeguarding their notes for years. Yet what often feels like a setback is actually a reflection of how rapidly global banking procedures have evolved. Denial at the counter does not represent a dead end, nor does it imply anything improper about the holder. Instead, it highlights a shift in worldwide monetary infrastructure, one where banks apply far stricter standards to the handling of certain notes. Stepping into this environment requires a clear understanding of why these rejections occur and how individuals can navigate them responsibly without misunderstanding the motives behind institutional decisions. In recent years, particularly moving into 2025, many banks have taken on extensive revisions to their foreign currency procedures. These changes come in response to international regulatory updates, technological advances, and a greater push to safeguard financial networks from risks related to fraud or misinformation. For holders of currencies like the Iraqi dinar, Vietnamese dong, or Zimbabwean notes, this means the process that once seemed straightforward is now much more scrutinized. Banks rely on increasingly sophisticated verification tools designed to detect even minor irregularities in print quality, ink patterns, or issuing dates. Older or demonetized versions of notes are often screened out by default. Understanding this environment helps currency holders approach these interactions with a clearer sense of what to expect, reducing frustration and empowering them to prepare properly before visiting a financial institution. The heightened security shaping the current financial climate has its roots in global reforms. Central banks, regulators, and international policymakers have spent recent years strengthening frameworks surrounding currency handling, cross-border transfers, and authenticity verification. As part of these initiatives, verification systems once limited to major hubs have become common even in mid-sized banks. This includes scanners capable of detecting microscopic inconsistencies and AI-based programs that compare physical notes against vast digital databases. A note may be genuine yet still rejected if it falls outside the standards currently supported by institutional policies. Many countries no longer recognize certain older designs, and banks must follow those guidelines strictly. This ensures compliance but also increases the likelihood that a customer may hear no, simply because the institution cannot legally move the note forward within its system. The Iraqi dinar is a clear example of how historical context affects modern banking decisions. Notes printed before 2003, for example, are widely rejected, not because they are counterfeit, but because the issuing authority no longer recognizes them as valid currency. The same applies to earlier paper versions of the Vietnamese Dong, which were replaced by polymer notes featuring updated security features. Likewise, certain Zimbabwean notes are viewed more as historical artifacts than as active instruments of exchange due to the substantial monetary changes the country has undergone. These realities are often misunderstood by the public, leading to frustration at the teller's window. But with a closer look, it becomes evident that rejection often stems from policy boundaries rather than institutional error or unwillingness. Recognizing the distinction can transform the experience from discouraging to clarifying. Because the burden of verification has shifted so heavily onto the currency holder, conducting a thorough review of one's notes before approaching a bank has become increasingly important. Modern notes include layers of security elements such as watermarks, metallic threads, microtext, color-shifting ink, raised printing, and specific serial conventions. Wear and tear, creases, faded areas, or damage can prompt a machine-assisted rejection even if the note is legitimate. For instances where there is uncertainty, individuals can turn to specialized verification services that issue grading or authentication certificates. This additional documentation strengthens credibility when presenting notes to a financial institution. In an era where precision matters more than ever, self-verification serves as a vital preliminary step, reducing the likelihood of unexpected results during bank evaluations. When individuals face rejection at a local branch, one common misconception is that all banks follow identical currency policies. In reality, financial institutions vary significantly in their handling of exotic or less commonly traded currencies. Some banks maintain active connections with foreign central banks, while others limit their participation in such networks. Many retail branches operate with limited authority and may redirect customers because they lack the necessary equipment or trained staff to process advanced verification checks. Asking targeted, clear questions can help individuals determine whether a bank is equipped to evaluate their specific notes. These questions may relate to whether the institution currently handles that currency, whether it maintains partnerships necessary for redemption, or whether authenticated notes from professional services are accepted. Requesting written clarification of institutional policies can be especially helpful. Documentation ensures that the information provided by a bank representative is consistent and reduces the likelihood of misunderstandings across different visits or branches. It also helps customers map out their next steps more effectively. Some financial institutions operate in layers, where standard branches handle only routine foreign currency exchanges, while specialized divisions process more complex cases. Understanding the internal structure of the institution can save considerable time and prevent individuals from expecting services that the location is not authorized to provide. With this knowledge, holders of exotic currencies can choose the appropriate entry point rather than relying on assumptions that may no longer apply in today's regulated landscape. When a major institution declines to process notes, even after authenticity has been confirmed, the next option often involves seeking out specialized facilities built specifically for handling less common currencies. These entities have expanded over the past decade, offering structured environments with advanced verification equipment and trained compliance personnel. Access typically requires scheduling appointments and presenting comprehensive documentation. While these centers do not operate as walk-in locations, they provide an avenue for holders of foreign notes who need a more rigorous evaluation than their local branch can provide. Their existence demonstrates that rejection at a basic retail bank is not the end of the road, but a signal to pursue alternate, more capable institutions. As the regulatory environment becomes more thorough, documentation has emerged as a critical factor in whether a currency can be processed. Banks and specialized centers must verify not only the authenticity of the notes but also the legitimacy of their acquisition. Proof of purchase, receipts from authorized dealers, and digital order confirmations help establish a clear chain of ownership. Identification documents are often cross-checked against financial regulations, and certain transactions may require additional affidavits affirming lawful acquisition. In some cases, especially involving Zimbabwean currency, institutions may request acknowledgement forms stating that the holder understands the specific status of the notes. Compliance teams rely on these materials to ensure transparency and mitigate risk, making complete documentation essential for smooth processing. Analysts observing global financial behavior note that these increased rejections do not reflect arbitrary tightening, but rather a broad restructuring of monetary oversight. Many experts describe the current environment as a preparatory phase where outdated or risky elements must be filtered out before adopting new systems. Countries such as Iraq have strengthened financial regulations, Vietnam is exploring digital currency frameworks, and Zimbabwe has introduced alternative asset-backed instruments. These changes indicate shifting approaches to currency management worldwide. While individual note holders may experience inconvenience, these developments are part of a larger effort to modernize financial ecosystems and establish stronger, more transparent standards for cross-border transactions. For those unable to process their notes at conventional banks, additional pathways exist. Licensed currency brokers, regulated under state or national financial laws, provide services tailored to handling foreign notes under strict compliance systems. These brokers often offer structured processes that include digital records and detailed audit trails. Airport exchange counters provide another option, typically used for smaller amounts due to their simplified procedures and less favorable conversion terms. Some individuals may also interact with private collectors who seek older or unusual note series, though caution is essential when pursuing this route. Structured agreements between intermediaries and note holders can also serve as alternative pathways, with clear terms and oversight built into the process. Observers of global monetary developments forecast that 2025 represents a period of broad transition. National banking reforms, technological enhancements, and evolving trade practices all contribute to changing conditions surrounding emerging market currencies. Iraq's progress toward stronger banking systems, Vietnam's experimentation with digital technologies, and Zimbabwe's financial restructuring signal a movement toward modernized frameworks. These developments, while complex, underscore the need for individuals handling foreign notes to stay informed and adaptable. Rejection at a teller's window may initially seem discouraging, but through a wider lens, it often indicates the need for better preparation or a more suitable pathway rather than a closed door. Hearing that a note cannot be processed can cause immediate concern. Yet many holders discover that the issue lies not in the currency itself, but in the institution's current capabilities. Documentation gaps, verification requirements, and variations in institutional policies determine outcomes more often than the physical note. Those who maintain thorough records and understand the layered nature of financial systems typically move through the process more efficiently. This alignment between preparedness and institutional expectations reflects a broader shift toward transparency and accountability throughout the global financial environment. As these expectations grow more standardized, individuals are encouraged to approach the process methodically rather than emotionally. Once authenticity and documentation are established, individuals must navigate the multilayered nature of the modern financial network. Banks now operate within tiered systems, each with its own capacity for handling exotic notes. Retail branches serve as the initial access point but often cannot meet the requirements for high documentation transactions. Regional hubs, equipped with advanced verification tools and trained personnel, handle more complex cases. Meanwhile, specialized divisions manage the highest levels of scrutiny, coordinating internationally and working within strict compliance frameworks. Understanding these layers helps individuals identify the most effective route for processing their notes and prevents misinterpretation of retail-level rejections. In situations where an institution remains unable to process the notes, specialized centers located in major metropolitan areas provide an alternative. These facilities operate with comprehensive intake procedures, including biometric verification, documentation review, and multilayer authentication processes. Appointments are required, often booked well in advance, reflecting the thoroughness of their workflow. Each visitor undergoes checks aligned with international compliance standards, ensuring that all currency processed through the facility adheres to established regulations. While these centers may feel more formal than a standard bank visit, They serve an important role in today's financial infrastructure by offering pathways for assets that require heightened scrutiny. Documentation remains a pivotal element for successful processing. Incomplete paperwork often causes more delays than issues with note authenticity. Modern systems expect a clear, traceable history of the currency, including purchase records, dealer certifications, identification consistency, and any required acknowledgments. These items form the foundation of compliance evaluations. Investors or holders who maintain detailed records find themselves moving through the system more smoothly, while those without proper documents may face repeated obstacles regardless of the quality of their notes. This emphasis on documentation reflects the banking sector's ongoing efforts to reinforce transparency throughout every stage of foreign currency handling. Market analysts suggest that the increase in rejections observed in 2025 reflects a broader cleansing process within financial networks. As new technologies emerge and more countries modernize their monetary structures, institutions must ensure that older, undocumented, or high-risk notes are thoroughly screened. This process may be inconvenient but contributes to the strengthening of global financial stability. The strengthened regulatory position of Iraq, Vietnam's movement toward digital settlement options, and Zimbabwe's adoption of newer financial instruments demonstrate how multiple nations are reshaping their financial identities. Analysts often draw parallels to historical moments of economic restructuring, noting that similar patterns of adjustment have preceded major developments in the global financial system. For individuals whose notes are rejected at a local branch, multiple parallel avenues remain open. Licensed brokers with strong compliance frameworks, structured agreements with verified intermediaries, and specialized centers designed for complex verification all serve as potential pathways. Each option functions within a regulated environment meant to provide clarity and legality. Airport exchange counters, while limited, offer small-scale alternatives for those needing immediate liquidity. Collectors may also serve as buyers for discontinued or unusual note types, though this path requires careful attention to fairness and legitimacy. In all cases, documentation plays a critical role in ensuring transparency and protecting both parties involved. Observers of global monetary trends describe the current period as one in which financial systems worldwide are transitioning toward diversified reserve structures and enhanced digital oversight. Many nations are modernizing their reporting methods, strengthening their banking sectors, and cooperating more closely on currency-related technologies. These developments suggest a shift in how the international community organizes settlements and maintains stability across borders. As emerging markets play larger roles in regional trade discussions, their currencies attract new attention, creating an environment where proper verification and documentation are increasingly necessary. Although rejection at a teller window may feel disheartening, it often underscores the importance of preparation rather than signaling a permanent obstacle. Modern financial systems reward thorough record-keeping, strong documentation, and clear understanding of institutional pathways. Those who approach the process with organization and awareness tend to navigate it more effectively. The monetary environment of 2025 encourages individuals to respond to challenges with patience and structure, ensuring that each step aligns with regulatory expectations and evolving global standards. As the financial landscape continues transforming, individuals handling exotic currencies benefit from recognizing the importance of verification, documentation, and informed decision-making. The systems in place today are designed to ensure safety, clarity, and transparency. Those who adapt to these requirements find themselves better equipped to work within the evolving network of institutions and procedures. Rather than serving as a final barrier, rejection often becomes a signal pointing toward more appropriate pathways and better prepared interactions within a rapidly advancing financial world.